Berkshire Hathaway is one of the most coveted stocks and one of the biggest companies in the world. The conglomerate has made a name for itself, thanks to the prowess of Warren Buffett, who acquired the company in the mid-1960s. The billionaire investor has spent his time as the head of Berkshire, turning it into a holding company by buying up troubled businesses and turning them around, with familiar brand names like Geico, Duracell, and Fruit of the Loom under its belt. The Omaha, Nebraska company has a market capitalization that exceeds $640 billion, with its class of stock trading well above $400,000 per share. Warren Buffett purchased Berkshire Hathaway in 1965, turning it into the world's largest holding company by buying troubled businesses and turning them around. Berkshire Hathaway's lifeblood is what industry insiders call a float. This is any money paid to Berkshire Hathaway's insurance subsidiaries and premiums, but has yet to be used to cover any claims. This money, also referred to as available reserve, doesn't actually belong to the insurance company. Instead, it remains on hand to be invested as its managers see fit. The company's float, $138 billion in 2020, is not only one of the largest in the world, but more than 3,000 times what it was in 1970.6. It allows Berkshire Hathaway to quickly purchase temporarily wounded companies and breathe life back into them. That's exactly what it did with Fruit of the Loom. Berkshire purchased the struggling clothing company for a mere $835 million in 2002 after its stock lost 97% of its value. One of the prime tenets held by Buffett's mentor, Benjamin Graham, is that dividends are an investor's secret weapon. Many of the Fortune 500 companies in which Berkshire Hathaway holds large positions, Apple, Coca-Cola, and American Express, to name a few, have a steady history of maintaining or increasing dividends every year. If dividends are what attract Buffett to a company, the same rule doesn't necessarily apply to his conglomerate. In fact, the same Buffett who invests in companies that pay dividends avoids paying them out to his own investors. At first, this seems so self-evident that it barely counts as an observation. It makes sense to take the cash that other companies offer you, but never to pay cash out yourself. The only time Berkshire Hathaway actually paid a dividend was once in 1967 to the tune of 10 cents per share. To this day, Buffett claims that he must have been in the bathroom when the dividend was authorized. That being said, it would be short-sighted for any Berkshire Hathaway shareholder to complain about the company's refusal to pay dividends. The stock price for Class A shares has skyrocketed since Buffett took the helm, trading at $275 in 1980. $32,500 in 1995, and $494,343 as of the May 5, 2022 market close. A track record without comparison.